Ever feel like trading is one giant emotional roller coaster? You hit a few winning trades and suddenly you're practically a Wall Street wizard, but then,
Reality sets in.
boom! Exactly. It's like the rug gets pulled out from under you.
It happens to the best of us. Really, it's incredibly common. Trading psychology, the mental game, that's often the missing piece of the puzzle.
And that's exactly why we're diving into Trading in the Zone today.
By Mark Douglas. A classic for a reason.
Right. And it's not like he's giving away some secret technical indicator. It's
Right.
all about this idea of rewiring your brain for success in the market. So I'm curious, what really struck you as we were going through this?
For me, it was Douglas's emphasis on mindset. He's really clear that consistent success in trading, it hinges more on shifting your mindset than just mastering any particular system or indicator.
Okay, so it's not just about finding that holy grail trading strategy.
Exactly. He argues that it's about mastering yourself, your emotions, your reactions to the market. Because let's be honest, we've all been there. Staring at a chart, feeling that knot in your stomach, the doubt creeping in.
The emotions go haywire.
It's our biology at play. Douglas explains that our brains are naturally wired to avoid pain, even in the context of trading.
So we're basically programmed to self-sabotage.
In a way, yes. We tend to filter out information that contradicts our expectations, even if it means holding on to a losing trade for way too long.
It's like we're trying to protect our egos more than our accounts.
Precisely. And that desire to be right, to avoid the pain of admitting we're wrong, it can lead to really bad decisions.
Reminds me of that example Douglas gives about the person who's terrified of all dogs because of one bad childhood experience. One bite, and their brain permanently links dog with danger, even if most pucks are perfectly friendly.
Right, it completely warps their perception.
And that's what we're doing in the markets, isn't it? We see
Yeah.
one bad trade, one market crash, and suddenly everything looks like a threat.
Exactly. It's like we're seeing ghosts in the data. Instead of objectively analyzing the information, we're letting our past experiences and our desire for certainty cloud our judgment.
So the market itself isn't inherently good or bad. It's how our brains interpret it that causes all the trouble.
The market itself is neutral. It's like this constant stream of data. It's our interpretation of that data, often colored by fear, greed, ego, that leads to emotional trading and often poor decisions.
Okay, that's both fascinating and a little unsettling, right? If we're naturally inclined to sabotage ourselves like this, how do we actually overcome our own brains and find some consistency? So if our brains are basically wired to make trading harder than it needs to be,
It's a tough thing to admit, but yeah.
how do we work with that? How do we kind of, I don't know, short circuit that system and find some consistency in our trading?
Well, that's where Douglas introduces this really powerful concept, and it's the concept of developing a probabilistic mindset.
Probabilistic mindset. Okay, so break that down for me. What does that actually mean in the context of trading?
So it means shifting away from this idea that we need to predict the market's every move with 100% certainty.
Because who can do that?
Exactly. Nobody. And Douglas is very upfront about this. He says certainty in the markets is an illusion.
It's so seductive, though, right? You see all these indicators, all this analysis, and you think, okay, there's got to be a way to figure this out completely.
It's incredibly tempting, especially when you're first starting out. You think there's got to be some secret formula out there. But the market is just way too complex for that. There are too many variables, too many players, too much information flowing all the time.
It's like trying to predict the weather down to the exact minute, years in advance.
Right.
Impossible.
I got it. It's impossible.
Yeah.
And just like we check the weather forecast to make more informed decisions, we use technical analysis. We use fundamental analysis, all these different tools. But we can't let those tools become a crutch.
Because those tools are based on past data, right? And as they say, past performance is not indicative of future results.
Exactly. Douglas actually puts it really well, and I'm going to quote him here. He says, the most fundamental characteristic of the market's behavior is that each now moment is always a unique occurrence with its own outcome, independent of all others.
Wow. Okay, so that's both freeing and terrifying at the same time, right? Because it means I don't have to be a perfect market psychic, but it
Yeah.
also means there's no, like, holy grail to this.
Exactly. And that's the beauty of the probabilistic mindset. It allows you to say, okay, I accept that I can't know everything. I accept that there's uncertainty. But within that uncertainty, you can still find an edge.
Okay, so I'm identifying what I believe to be an edge.
Right.
I'm defining my risk, which we can talk about more in a bit, and I'm placing trades based on the probabilities, not some guarantee of the outcome.
Exactly. You're not trying to be right on every single trade. It's more about consistently placing those odds in your favor over the long haul. It's a long game.
It's like that old saying, you don't have to be faster than the bear, you just have to be faster than the guy running next to you.
I like that. That's a good one.
Right.
It's all about probabilities.
Okay, now you're speaking my language, probabilities. So I'm thinking, what's a good example of this in action?
Think of a casino.
Okay.
They don't know who's going to win on any given spin of the roulette wheel.
Right.
They don't know who's going to get blackjack, who's going to hit the jackpot on the slot machine. But what they do understand is that with each spin, with each hand dealt, the odds are slightly in their favor.
The house always wins, or at least that's what they say.
Right. And over thousands, tens of thousands, millions of spins, those small edges add up to consistent profits.
Okay, that casino analogy really clicks for me. But I think where a lot of people get tripped up is, how do you actually apply that to trading? Because it still feels a little bit abstract, right?
And that's where Douglas's 5 fundamental truths about trading come in. And these aren't just like theoretical ideas either.
Right.
These are practical principles you can actually use to guide your decisions.
Okay, I'm ready. Give me the truth. Lay those truths on me.
Okay, truth number 1,
Yeah.
and it's a bit of a reality check. Anything can happen.
Okay.
He doesn't mean this in some, vague cosmic sense.
Right.
He's simply acknowledging the nature of the market,
Right, of course.
that there are these countless variables. We've talked
Yeah.
about them. It's unpredictable.
So even if I do all my research, I follow my strategy, the market can still just be like, nope,
Absolutely.
not today. I have to admit, that's a little unnerving.
It is. It's a tough pill to swallow. But you know what? That leads us perfectly to truth number 2, which is you don't need to know what is going to happen next in order to make money.
You're telling me I don't need a crystal ball. I can breathe easy.
You can breathe. You don't need that crystal ball.
Okay.
Because so many traders get caught in this trap of, well, I need to know exactly what's going to happen before I enter a trade. It's called analysis paralysis.
Oh, I know it well. Staring at my charts, looking for that one indicator that's going to tell me everything I need to know.
You're guaranteed this is it.
Yeah, this is it. This is the sign.
Right.
The perfect setup.
Which, let's be honest, probably doesn't exist. It doesn't. And that search for that perfect setup can lead us to miss opportunities. Or even worse, it can lead us to force trades that don't really fit our strategy just because we're so eager to find that certainty.
Right, right. Because we get impatient. We're like, come on, market, give me a sign.
Yes, do something.
Let me predict you, right? Okay, so we've got 2 truths down. What's number 3?
Truth number 3 goes hand in hand with that. And it is. There is a random distribution between wins and losses for any given set of variables that define an edge.
Okay, hold on. So you're saying even with a solid strategy,
Yeah.
even with an edge, as you and Douglas call it, I'm not going to win every trade.
You're not going to win every trade.
My dreams are crushed. Okay?
But it's okay.
I'll be okay.
Because that leads us to truth number 4.
All right, truth number 4, redeem it. Redeem it.
Okay. An edge is nothing more than an indication of a higher probability of one thing happening over another.
Okay.
That's it.
So it's not a guarantee.
No,
It's about tilting the odds just slightly in my favor.
for the
then.
long term, yeah.
Over the long term. Okay, so it's not about, again, not about predicting the future.
No.
It's about identifying those higher probability setups,
Yes.
managing my risk, and accepting that losses are just, they're part of the game.
They're part of the process.
Did I just have a breakthrough? I think I just had a breakthrough.
I think you did. It sounds like you're starting to embrace the probabilistic mindset.
Maybe.
And that actually leads us beautifully to the 5th and final truth,
Okay.
which kind of ties everything together.
All right.
Every moment in the market is unique.
I'm sensing a theme here. No matter how much analysis I do, how fancy my charts get, I can't erase the uncertainty of each trading moment, can I?
That's exactly right. And trying to erase that uncertainty is where a lot of traders get into trouble. They get stuck in this cycle of trying to find the perfect answer.
So we're always facing these unique moments, every single tick of the chart.
It's like a new roll of the dice.
It really is. Even if, I don't know, the setup looks similar to 100 trades I've taken in the past.
Right.
This one's different because it's happening now.
This moment in time. And that's, I think, why a lot of traders, they get caught up in relying solely on past performance to predict what's going to happen next.
Right.
But if every moment is unique,
Yeah.
you need a framework to be able to deal with that constant uncertainty.
Okay. So less about predicting, more about reacting. Is that what you're saying?
Reacting, but reacting with a plan. And that's where Douglas's 7 principles of consistency come into play.
7 principles of consistency. Okay, so this is where the rubber meets the road.
Exactly.
We're taking those truths that we talked about, those 5 fundamental truths about trading, and we're like, okay, how do I actually apply this?
Yeah, how do we bridge that gap? A lot of people can understand things intellectually, but to put it into practice, that's the real challenge.
It's so true. It's like, I can read all the books, I can listen to all the podcasts,
Yeah.
but when I'm staring at that chart and my money's on the line, it's a different story.
It is different.
Yeah.
So think of these 7 principles as that bridge
Okay.
between understanding and action. So principle number 1, this is huge, objectively identifying your edge.
Okay. Define edge. What are we talking about here?
Your edge is what's the thing that gives you a higher probability of success in the markets?
Okay.
Is it a certain chart pattern you've noticed? Is it an indicator, a combination of indicators?
Could be fundamental analysis?
It's going to be fundamental analysis.
Okay.
It's going to be different for everybody,
Right.
but you need to know what it is.
So no more just like, this trade feels good,
Hmm.
or, I don't know, my aunt's friend told me to buy this stock.
That's not an edge. You got to have a reason.
That's right. Aunt Betty's not giving financial advice. Okay. So I've got my edge. I think I know what it is. What's next?
So number 2, this is huge, predefining your risk on every single trade.
Oh, risk management. I knew you were going to say it.
We have to talk about
We
it.
do. It's so important.
It's crucial.
But it's easy to overlook. Okay. So predefining my risk. What does that look like in practice?
Before you even enter a trade, before you click that button,
Yeah.
you know exactly how much you are willing to lose.
Okay. So that's about what? Protecting myself from myself.
Protecting yourself from those emotional decisions. Because let's be honest, when a trade starts going against you, what's your instinct?
Hold on for dear life.
Yes, it's got to come back.
I'm a winner. This is fine.
Right. But you're making decisions based on hope at that point.
Hope is not a strategy.
It's not. Douglas emphasizes this. Consistent traders, they don't rely on hope. They rely on their system, they rely on their edge, and they rely on their predefined risk.
Okay, so I've predefined my risk. I'm not panicking. I'm not holding on for dear life. Now we're talking about the actual trading part, right?
Now we're getting to the action. So principle number 4, acting decisively on your edge. When you see an opportunity, it aligns with your plan. You've done your analysis, you act. No hesitation.
So this is about having a plan and sticking to it.
Sticking to it no matter what your emotions are telling you.
Oh, man. Emotions are out. This is like Spock level trading.
It kind of is. And once you're in a trade, that's when principle number 5 comes in, taking profits systematically. Again, according to the plan.
Okay, so no more moving my profit targets further away because I'm like, oh, this is going to the moon.
Exactly. That's your emotions talking again. You got to trust the system.
Right, right. Okay, what else we got?
So we're human.
Right, sadly.
We're going to make mistakes.
Yes.
Even with the most well-defined system in the world.
I'm a master at making mistakes.
That's why principle number 6 is so crucial. Monitoring for errors.
Okay.
Consistently review your trades, and this is key.
Okay.
Review your winners and your losers.
Both.
Don't just look at the things that went right. Figure out where you strayed from the plan.
Okay.
So a constant process of self-reflection.
Self-awareness, all those buzzwords.
They apply here. And then, number 7, this is the big one. It ties it all together. Committing to these principles without exception.
So this isn't just like a one-time thing.
This is a lifestyle.
Oh boy, I knew it. It's not just about the charts, is it?
It's about you. It's about mastering yourself.
Well, on that note, listeners, we hope you enjoyed this deep dive into Trading in the Zone by Mark Douglas. It's not about predicting the future, it's about mastering yourself. And until next time, happy trading, everybody.